Welcome back to Everything Money. As always, we're analyzing stocks here. Paul, we really have a passion for this. If you're new to the channel, I bring your normal people questions to a couple guys who are moving around a lot of money in the stock market, real estate, businesses. Today, we're doing a blind reaction. We've stated on this show multiple times that we, as value investors, and if you're new to what this is, do some research, but we sort of need to turn off our emotions at times, not actually look at the companies, the hype, what people are saying about it, what's in the news. Oh, dear God, what's in the news? We implore you to look at the numbers. And so today, Paul has absolutely no clue what this company is. We didn't tell him anything. We just walked out of the room. We brought him back in, and we're going to show Paul the numbers behind the company. He can give us a fair value, what he thinks about the company. So there's no swaying him. There's no YouTube influencers telling him how wonderful this may be in the future. Or
do you think they sway me anyhow?
Well, they might be swaying me, Paul. So in reality, I'm talking to myself. Mo is here as well, and Mo, I love you nonetheless. But
what does that mean?
Because we're not going to do a trade here. I mean, we might look at it later. We will look at.
I was actually looking at is that the chart? I was looking at the chart trying to see if I could
guess it.
Figure it out. I mean, I figured out the Palantir one.
Yeah, so we'll certainly get Mo's thoughts and let's figure this out. Paul, give us your initial thoughts on this blind reaction of a wonderful company that's been around for 6 some odd years. Go ahead.
2.5 billion market cap, 8 PE, profit margin of 13.6. I like it. Good stable free cash flow. Last year they did 450. 5-year average is 500. So it tells me that maybe last year might have been a COVID related. Return on assets, 9%. Return on invested capital, 11%. Not bad.
It's refreshing to see PE so low.
It is. So they were at $50 a share in 2018, and now they're at $11 or $12 a share.
That's about right, yeah.
Okay. So far, I like everything about it so far.
Interesting. Okay. It's funny is I think other viewers might say, what are you talking about? That stock price is way down. I hate this.
Well, that's what we're trying to teach here is the fact that this is a good thing. If you understand the fundamentals, and as long as this is driven because of emotional reasons, this is a good thing.
Okay, Paul, here's the income statement.
Oh my lordy, too shorty.
Go ahead.
$8 million in revenue in 2014, 2.3. Now, it was down last year, so one of the first questions I'm going to ask is it an industry that's going to rebound? Like, was it driven because of COVID? That's the question I have here, because it was already this is big growth here. But 19 to 20 wasn't huge growth. I wonder how much of it was affected by COVID. So this tells me it's a COVID-affected stock. All right, not bad. Let me see some other things. Special income and charges, nothing. Good. Okay. This is interesting. Next.
All right, here is the remainder of the income statement.
Okay,
Paul,
net income, 229 to 312. Okay, that's weird. Revenue's up a lot, yet the net income isn't up a ton. Again, it was going up though. Okay, not bad. This is definitely a COVID-affected stock. Shares outstanding, not surprising. A young company, up a little bit, about 5% over the last 5 years. Not a big deal. I'll survive.
Okay.
Okay, you already showed. Oh no, you didn't.
All right, Paul,
current assets.
Yeah, here's the current assets over liabilities.
1.9 billion versus current liabilities of 501. Wow. What's the total liabilities? So total liabilities. Oh, so they have enough cash on hand to pay off all by $500 million. And what was their market cap? 2.5. So it's actually a $2 billion company.
$2 billion? Yeah.
Well, yeah, right? Okay, that's pretty good. All right.
Wow, this market cap.
This seems like, I think we've had all checks so far, pretty much.
Paul, explain what you just did there with.
So guys, they have enough cash on hand to pay off all their debts. So when you have that money left over, you can essentially take that extra cash and subtract it from the market cap. And the reason being is, if you bought a company with no debt and $100 million in the bank, and you get that $100 million, which is what you're doing by stock, you're basically paying $100 million less for the company because you have access to that cash. So that's called enterprise value. The enterprise value in this company is lower than the market cap. Most companies, it's higher. And one of the things I do is look at market cap, but we should look at, there's one metric about enterprise value that we can look at. I don't really do that right now because I'm looking at the equity portion, but I do factor it in when it's on the good side for me.
Let's look at the cash flow statement.
All right, my favorite part. All right, let's look at this. Whoa.
Shout out some of those numbers.
306 to 451 with an average of 500. So it's selling for like 4 or 5 times free cash flow.
Yes.
What the what? All right, this is an all 8 check, all 8 pillar stock, obviously, right? I don't think we had a single X on there.
Yeah, shares outstanding though. Remember?
Oh, yes. You're right. Shares outstanding. It had 1X. I mean, guys, so this is what we're supposed to do. Then the next step here is you go and look at what kind of company it is, what industry it's in, what's the potential for the company, et cetera. From all things I see here, I would buy this company because the shares outstanding is increasing. Go understand what they plan on doing, but it seems like if the growth is there and the only reason they had slower growth last year or no growth was because of COVID, I mean, yeah, I don't know. I have no clue what company this is. I'm really trying to rack my brain.
Are people trading this
So
company?
I like it, and I wish I knew what it was because I think I'm going to put this in as a dog stock because it's on the bottom right now, but it definitely has potential to start moving forward. And I looked at the daily stochastic, that's starting to move up on me. So let's look at the daily chart real quick just to see some detail. Yeah, look at this. I mean, it has pretty decent volume. It's under all 4 of its major moving averages, which I don't like.
I knew you weren't going to like that.
Yeah, but if it gets enough volume, if it gets volume like this for maybe 10 days in a row,
yes,
this thing can really push up and maybe get through there. But with that being said, let me go back to the long term one more time.
I'm trying to cheat, by the way.
I noticed something. There is consolidation right in here. So if this thing gets moving, I do believe it can get to $15, $16 a share, and then maybe get up to this $20, $21 area again. But I'm going to put this one in. I don't even know what it is, but I'm going to put it into as a dog stock. So that's a good thing about this. You can do all charting without knowing what the hell anything is.
Paul, what are you doing over there, you little weasel?
Did you figure it out?
Okay, I'm guessing it's MOMO.
How did you guess?
Is it right?
It is right.
So here's how I knew it. What I did was I went to our website.
I can show it right now.
And if you go to our website, you can select all the 8
pillar.
So then I started scrolling down for a $12 stock or something like that. I was like, what's one we've talked about recently? And it was MOMO.
Oh, so you can go to 8 pillars and select. Oh, so what did you do?
Yeah.
You added. Look behind.
I did the checks on PE, everything but the shares outstanding. No, not shares outstanding.
Okay, you did all this.
I did all this.
Oh my God.
I hit go.
Okay.
And then I just started scrolling for a low teens price.
That's why.
Paul.
And I was like, okay, what is it? I'm like looking here. I saw this one. And then finally I remember going, oh, MOMO. Because I saw Tim. I'm like, maybe he did Tim. I'm like, no. Because it said 52-week low was $11.20. That was too close to it. And then finally I found MOMO. I said, it's MOMO.
So here it is right here, Paul.
Yeah, right there.
MOMO.
I remember having this on my watch list, and I liked it in here, but the reason I didn't like it is because it couldn't break through those moving averages. So it's done it before. That was the reason, because this was on there about a month ago.
We are showing off the software behind Paul. This is the Everything Money software. We've developed this because months and months people are asking why we kept on, how do we get a hold of Y charts? Paul used to be paying for Y charts. So Paul developed this software. There's an app now. You can get all of this as a part of our Patreon. Join the Patreon below. The fee for the Patreon goes up every single month. It used to be a mere $8. It's $25 or $26 now. It's going to go up every month. The tiers fill. We have one of the most astonishing Patreons out there, and you can get this software that Paul was using to cheat right now. Paul, do you know anything about MOMO? Because I certainly don't. But folks, if you're new to this, MOMO provides mobile-based social networking services. The firm enables users to establish and expand social relationships based on location and interest. MOMO. Paul, what are do you know anything about this company?
All right, so guys, on the Everything Money app, I pulled up MOMO, went to the news section, and so I guess MOMO owns 2 of the largest dating apps in China. I don't know why the revenue fell. Maybe people stopped advertising for a little bit. But here's the interesting thing I saw on this article right here. If you look down here, look at their growth. This is where it's lost its momentum. And MOMO lost its momentum. Revenue growth year over year. You're sitting here looking at 313%, 138, 51, 27, went down 12. Net income. Guys, this could exactly be an example of people just over-exaggerating and overdoing a momentum decline. Like they're sitting there saying, oh my God, this thing is falling, it's tanking. It could very well be a good buy. Now, my question is, why hasn't Baidu bought these guys? Right? I look at Baidu going, they have all this free cash flow. You can buy this company for $2 billion net of all cash. Who's going to acquire it? I mean, Baidu should be acquiring this company.
Yeah. Do you want to put it in Stock Analyzer tool?
So let's put it in Stock Analyzer tool. We're going to go right here. We're going to do a 7-year analysis. As you can see how I'm doing it.
You get this software as well if you're a patron, and when we move off of Patreon, you'll always get this software at the price you pay today. Go ahead, Paul.
I'm going to go, 5, 10, 15% revenue growth.
They are selling off a little shares.
Selling off a little bit of shares. Profit margin will go 13, 15, 17. Free cash flow, I'm going to do the same thing. So lower than it is currently. PE, 12, 15, 18. Free cash flow, price of free cash flow, same thing, same multiple, because I want to keep it consistent. Returns, I bet you this is going to be all green all the entire way.
The current price is $12.51. Go ahead, Paul.
Yep, all green.
Show us that.
So guys, it has our stock worth between $16 and $66.
We've never had this before. All greens?
So the whole point here is, do you believe the numbers? And do you think that this company is going to keep growing from here? Now, what I might do is, I might buy a small piece of it. Nothing big, not a big piece of my portfolio, maybe a 0.5% of my portfolio, just to test it out and see. I don't know if there's options on this either, but I mean, this thing went, what was the peak price it had?
Oh yeah, wow. So, wow, February 2021, it was $20.
$53 in 2018.
Wow, yeah, look at that. Oh my
So look
gosh.
at this, guys. 2018, it was in this range right here. So I look at this going, hey, if you believe this thing can keep going, or maybe it's going to be an acquisition, a target, because I look at this going, if I'm a company out there in China, and I want to expand, like Baidu might want to expand its services, I would look at this going, hey, they have 2 of the top dating sites in China, or everything, let's start buying up shares and maybe make an acquisition at a much higher price.
That is our take. A blind react from Paul. You saw him go right through the numbers. This is funny. This is
So I'm 2 for 2 now. I guessed the first one blindly. The second one, though, I had to go cheat a little bit, but I still got it right. Because there were lots of options there. There were hundreds and hundreds of options.
That's right. You just
And I
guessed
was just scrolling. 'Cause I remember somebody said Momo, something like, we talked about Momo like a week or two ago.
They were asking for
on the
Mo in the
show.
live chat. So
Yeah.
yeah, the
Yeah,
morning
yeah.
show.
Oh,
So
is that what it was?
Yeah.
Today?
Yesterday, I think.
yesterday,
Oh, maybe
yeah.
that's why then.
If you're interested in following Mo and the trading, Mo goes live every morning at 9 a.m. Eastern, and we go live every Tuesday at 1 p.m. Eastern. Join us to ask these very questions. Join us to ask these questions. Paul, that's it. Momo, what an interesting company. When there's fear in the water, we're getting a little frothy at the mouth here, you know.
Yeah, I mean, the stock is down 80% from its peak in 2018.
80%.
So if I told you back here,
If you would have told us, you do tell us, and they tell you you're foolish, Paul. You're
yep,
missing
you've been
out.
like, no, Paul, you're an idiot. Okay, cool, I'm an idiot. I love being an idiot.
Fondle the thumbs up on the way out, and we'll see you at this idiot's Mexican mansion.
Exactly.
We'll see you there.
Bye.
Bye.